This is Nightly Business Report with Bill Griffith and Sue Herrera.
Blue chip earnings. Results from some of the world's biggest companies lift the market and put the focus on a traditionally defensive sector, consumer staples.
Pay gap. The Labor Department takes aim at Oracle, accusing that company of underpaying women and minorities by hundreds of millions of dollars.
Unconventional mortgages. They're reminiscent of the housing crisis, and now they're making a comeback. Those stories and much more tonight on Nightly Business Report for this Wednesday, January 23rd.
Good evening, everyone, and welcome. It was all about earnings today. A batch of strong results from some of the world's biggest blue chips helped stabilize the market even after a downward blip midday. IBM led the way with a nearly 9% gain following its solid quarter that we told you about last night. The focus on corporate America's bottom line is a reminder that earnings still matter a lot, even as concerns over a global economic slowdown mount. And with the partial government shutdown limiting the release of some economic reports, there's even more scrutiny being placed on what corporate America says about the economic environment. And with that, the Dow Jones Industrial Average rose 171 points to 24,575. The NASDAQ and the S&P 500 both added 5.
And so we start tonight with results from Procter Gamble. The consumer products company reported better than expected earnings and sales and raised its outlook for the whole year. And that sent the stock higher by more than 4.5%. Seema Modi has more on what's going right for the world's largest consumer goods maker.
Procter Gamble's strong earnings report defied Wall Street expectations and trumped concerns of the consumer pulling back on spending amid a slowdown in the global economy. Its sales growth was driven by a wide range of categories from beauty to home care products, which rival Kimberly-Clark did not benefit from as the smaller consumer staples company saw profits fall in the same quarter. P&G's upbeat report card comes amid stiff competition from new players and high raw material costs. It's these challenges that pushed Procter & Gamble last year to raise prices for a number of its products, a move that sparked concerns across Wall Street. However, higher prices don't seem to have discouraged consumers for now. The maker of Head & Shoulders shampoo and Oil of Olay skin cream raised its full-year forecast and now expects organic sales to rise between 2 and 4% in fiscal 2019. What's more is Procter & Gamble saw impressive growth in China, a country that just reported its slowest pace of growth in 28 years. On the conference call with analysts, Chief Financial Officer John Moeller said at this point the company is not seeing weakness in the Chinese consumer.
We do not see a sign at this point of slowdown of the consumer in China, as witnessed by those results. Market growth rates continue to be relatively strong. Within China, just like the balance of the business, we have our successes and our challenges.
Though Moeller did reference broader challenges related to political uncertainties to the ongoing trade dispute.
Macro uncertainties stemming from issues like Brexit, a crisis of consumer confidence in France, and trade and other policy impacts that can impact both the top and bottom line.
For now, investors remain upbeat on the stock. For Nightly Business Report, I'm Seema Modi.
That Procter & Gamble report have lit the entire sector. The consumer staple ETF closed up 1%, making it one of the best performing today. So what is this telling us about the market and the economy? Jonathan Feeney, he covers the sector at Consumer Edge Research, and he joins us now with more on that. Good to see you again, Jonathan. Welcome back.
Thank you very much.
All right, the basic question is, what are these kind of workhorse type of stocks, these must-have kind of stocks for the consumer anyway? What are they telling us about the economy?
I think they're telling us a couple things. They're telling us that they got left behind a little bit in the very strong market rally that punctuated with October 2018. And they're telling us that while some things have changed, a lot of things have stayed the same. Online, different kinds of channels, people shopping, has made it a little bit more difficult for these brands, introduce new competition, and allowed consumers to maybe see discounts and take advantage of them more often, so it's harder for them to get the price they want for their goods. Right. But at the same time, people still love the brand. So it's nice to see. I think it's appropriate to see a little bit more recognition of that.
But I'm curious, this group is traditionally considered a very defensive group. You go to them when the stock market's going lower or if you're worried that the economy is going to slow down. And yet, as Courtney Reagan pointed out in her story, these companies have, or I should say Seema Modi said it, these companies have pricing power right now. So if the economy is slowing down, how is it these companies have pricing power?
Well, it's all relative. The pricing power, I think, maybe relative to other sectors where, that are a little bit more sensitive to how great the economy's doing. People need to eat. People need to clean their homes. People need to take out the trash and put on makeup. And if these companies can produce great innovations, consumers will pay for those things. History has shown us. Now, it's partly that, but it's also partly that the little dip that oil prices have taken in the fourth quarter of the year have given us a little bit more favorable cost outlook. So now I think some of these consumer staples companies don't need as much pricing to reach the profit targets that they already told us.
How much of it also has to do with the fact that consumers are reaching for some sort of a return in an uncertain and volatile stock market? They're looking for reliability.
No doubt about it. And if you think about, I've been doing this for 20 years. For most of my career, corporate bond yields, even treasury yields, have been significantly higher than the dividend yields and free cash flow yields for these companies. Yet many of these companies' dividends are the same or better than you can get in bonds right now. And for companies that have shown some resistance to inflation in the past, that would historically be a very, very good deal.
Jonathan Feeney with Consumer Edge Research. Thank you, Jonathan.
Thank you.
Elsewhere, Dow component United Technologies reported earnings that were well above what Wall Street analysts were expecting. Revenue was also stronger than estimates, thanks to the company's acquisition in November of defense contractor Rockwell Collins. The industrial conglomerate expects revenue and profit to rise this year overall as it prepares to break up into three separate parts. United Tech is considered a bellwether for other industrials, so analysts probably paid very close attention when the company said its operations in China are performing well and that the continuing government shutdown has not had a meaningful impact on its business. Shares were up more than 5% in today's session.
Despite the higher finish, stocks did turn lower for a short time midday as the transportation sector declined. The group was led lower by FedEx and UPS on a report that Amazon is trying to undercut its rivals' prices, just as it rolls out its own delivery service. And just as Amazon tries to disrupt and eventually dominate the shipping space, a new survey illustrates its power over the retail sector. Courtney Reagan has the details.
Retailers and brands are wrestling with whether or not Amazon is a friend or a foe. A new survey shows executives are leaning towards working with rather than against Amazon in coming years. Feedvisor runs a business helping third-party merchants sell their goods on Amazon. It surveyed more than 500 business leaders from established brands. More than half already sell on Amazon. Nearly 3/4 plan to sell there in the next 5 years. New customers is the main motivation. The majority of brands already selling on Amazon say more than 1/4 of their Amazon traffic are new to their brand. While Amazon has powerful reach, business leaders have concerns. 6 in 10 say lack of control over the brand is the biggest challenge, particularly when selling merchandise to Amazon that it then sells to shoppers. Counterfeit or unauthorized reselling of products by third-party sellers is still a big concern, even though Amazon works to address it. Amazon isn't the only online marketplace brands are interested in. Selling on multiple marketplaces is a growing strategy. Selling on eBay is nearly on par with Amazon for the brands surveyed. Walmart is a more distant third, and Walmart's Jet.com a trailing fourth. And just today, as an added incentive to sell on its site, Amazon is working on lowering the cost of delivery for marketplace sellers. The Wall Street Journal reports the online retailer is offering its marketplace sellers a service to pick up items to be shipped to shoppers from merchants' warehouses, which will cut out extra fees and surcharges carriers like FedEx and UPS charge. Those extra fees and surcharges can add up to 30% of shipping costs in many cases. For Nightly Business Report, I'm Courtney Reagan.
The oil market gave up earlier gains today over concerns about an economic slowdown, which of course would mean softer demand for fuel. Analysts say, though, that rising crude output also has been pressuring prices. U.S. crude settled around $52 a barrel today. And the recent volatility in the oil market has the attention of the CEO of Chevron.
The real thing we'd like to see is stability. And commodity markets, when they're volatile, they make it hard for investors to invest. It's hard on consumers. And so you really need a price that encourages investment and draws in enough new investment, but is not so high that it weighs on the economy. We're probably not far from that kind of a price right now.
And analysts also point out that the economic and political turmoil in Venezuela right now could just lead to more volatility in the oil market. President Trump today reportedly threatened to impose sanctions on Venezuela oil as soon as this week.
The CEO of Chevron made those comments at the World Economic Forum, where oil prices and the health of the global economy were top of mind. But as Joe Kernan reports from Davos, Switzerland, that's not all the business leaders were talking about.
Today, at the World Economic Forum, we heard from business leaders about technology and privacy, economic growth, the role of the Fed, and the health of the consumer. We spoke to Jamie Dimon, the CEO of J.P. Morgan.
3.5% global growth. The United States is doing fine. Trade may get resolved, and all those things may reverse. I mean, we're going to have a recession one day. We're adults. We should all understand that. And we don't know exactly what's going to cause the next one or exactly what the timetable is, but the financial system's in far better shape in the United States.
Michael Dell of Dell Technologies discussed the importance of artificial intelligence.
We're in a world where the digital transformation, the explosion in data, AI, machine learning, cloud, 5G, all those things are capturing the imagination of customers, and they require all kinds of new capabilities to be able to make that happen. And we've put ourselves in the position of combining the world's best capabilities to be able to enable that for 99% of the Fortune 500 and hundreds of thousands of millions of small, medium-sized businesses all over the world.
And Carlos Spridio, head of world's largest brewer, AB InBev, is looking for growth from beer drinkers all over the world.
Beer has gone through an amazing last 10 years, amazing assortment, widening in terms of styles, varieties, and the mature markets has really clicked to it. And so in some mature markets, yes, it's true that on average, beer is not growing volume-wise, but it's growing rate-wise. People are paying more for their beers. And if you look at the high-end segment, it's growing everywhere.
For Nightly Business Report, I'm Joe Kernan in Davos, Switzerland.
And back here in the U.S., the chair of the White House Council of Economic Advisors repeated a forecast that we've heard before, namely that growth in the U.S. could be zero in the first quarter if the government does not reopen soon. During an interview, Kevin Hassett added that second quarter growth could be humongous, to use his term, if the government reopens before then. Maybe somewhere between 4 and 5%, he said. Meanwhile, first quarter growth does tend to be notably weaker than growth in other quarters during the year. The partial shutdown, of course, is now in its 33rd day.
It is time to take a look at some of today's upgrades and downgrades. Dow component Walmart was upgraded to overweight from equal weight at Morgan Stanley. The analyst says that Walmart's U.S. operations can generate sales growth without sacrificing margins. The price target is $110. Walmart shares rose more than 1% to $98.71. Pfizer was downgraded to neutral from buy at UBS. The analyst cites the pending loss of patent protection on some drugs. The price target is $46. The shares fell a fraction to $42.16.
And fellow Dow component Merck was downgraded to market perform from outperform at BMO Capital Markets. The analyst cited the drug maker's over-reliance on its cancer drug, Keytruda. Price target now $80. That stock fell a fraction today to $75.44. And Lowe's was downgraded to hold from buy at Loop Capital Markets. The firm is less optimistic about the home improvement retailer's margins right now. So the price target is now $99, but nonetheless, the stock rose slightly to $91.83.
Still ahead, the bright spot in Ford's quarterly results. United Healthcare is suing the new Amazon, J.P. Morgan Chase, Berkshire venture. The insurer alleges that the group poached an employee and took trade secrets. The suit claims that the employee now poses a direct threat to United Health's Optum unit.
North America was a bright spot for Ford. The automaker reported earnings today that missed expectations by 2 cents, but that was not exactly a surprise since the company had already pre-announced those results. Revenue, though, was better than expected at more than $38 billion. Reaction in initial after-hours trading tonight was mixed. Phil LeBeau has the one key takeaway for investors tonight.
When you look at the fourth quarter for Ford, it's all about North America and the rest of the world. The rest of the world is in trouble for Ford. It lost a combined $780 million when you look at Europe, China, Asia, as well as South America, all markets where the company is struggling to restructure its business. Meanwhile, in North America, the company made $2 billion in the fourth quarter. For CEO Jim Hackett, when he talks with analysts, the key thing that everyone's going to be focused on, what will happen in 2019? The company says that it is moving forward with its restructuring, but Wall Street would like to hear more specifics, unclear when that will be happening. Phil LeBeau, Nightly Business Report, Fort Worth, Texas.
Broadband growth drives Comcast quarter, and that's where we begin tonight's market focus. The company says its NBC Universal Media unit and its high-speed internet business fueled growth. It did, however, lose cable customers, but that didn't stop Comcast from raising its quarterly dividend 10%. Shares were up 5.5% to $36.89. Comcast is the parent company of CNBC, which produces this broadcast. Verizon's media group is reportedly laying off 7% of jobs in the division previously called Oath. The group is made up of Verizon's media properties like Yahoo and the Huffington Post, as well as advertising and technology. The division was created in November to bring Oath under the Verizon brand. Oath was the result of the merger between AOL and Yahoo. Verizon shares were up nearly 1.5% at $57.76. Johnson & Johnson is reportedly looking to buy a surgical robots company called Auris Health. According to Bloomberg, a final deal has not been reached, and there is no certainty that talks will lead to a sale. J&J was unchanged at $128.80.
Walgreens Boots Alliance is going to pay more than $269 million to settle a number of civil fraud lawsuits. The company had been accused of overbilling federal health programs for over a decade. And according to this settlement agreement, Walgreens says, quote, it admits, acknowledges, and accepts responsibility for the conduct alleged by the federal government. Shares of the company were up about 12 cents today to 71.71. Texas Instruments today topped Wall Street profit forecast, but they missed on revenue. Analysts have been concerned about slowing smartphone sales. TI does supply touchscreen controllers for chips for things like iPhones and iPads. The stock was volatile in the initial after-hours trading tonight. It fell 1% in the regular session to 95.49.
One of the biggest software companies in the world now has a big target on its back. The Labor Department is accusing the company, Oracle, of discriminating against women and minority employees and costing them more than $400 million in lost wages. Josh Lipton has the details from San Francisco.
The new federal filing comes 2 years after the government first filed suit against Oracle for hiring discrimination. Now it's amending that complaint, bringing new evidence that it says clarifies the scope of the company's bias. The government says the company's methods of discrimination include steering these employees into lower paid jobs. Oracle's suppression of pay for its non-white, non-male employees is so extreme that it persists and gets worse over long careers, the government says. The complaint says these discriminatory practices impacted more than 5,000 women and more than 11,000 Asians. It says that Oracle discriminated in its college recruiting as well. Out of 500 hires that Oracle made between 2013 and 2016 for certain technical positions, only 6 were African American. Oracle fired right back, calling this lawsuit meritless. We fiercely disagree with the spurious claims and will continue in the process to prove them false. We are in compliance with our regulatory obligations, committed to equality, and proud of our employees. But concerns about bias in Silicon Valley extend well beyond just Oracle. When thousands of Google employees walked out of work in protest last fall, pay disparity was a concern they highlighted. And Uber made headlines when reports surfaced over the summer that it faced a federal investigation of its own over alleged gender discrimination. Those who study this issue say it continues to be a big problem in the tech industry, though some tech companies appear to be making progress. Just this week, Intel announced what it called a major milestone, achieving gender pay equity across its global workforce. Though the chip giant also acknowledged that it has more work to do, noting its lower representation of women in senior roles. For Nightly Business Report, I'm Josh Lipton, San Francisco.
And coming up, renewed risk. Demand for traditional home loans is down while more exotic type loans gain steam. We have two auto recalls to tell you about tonight. In one, Volvo is recalling more than 200,000 vehicles to fix a fuel leak. The automaker says an engineering problem could potentially cause fuel to leak into the engine compartment over time. There have been no reports, though, of injuries or damages as a result. Separately, Subaru has temporarily shut two of its factories in Japan to fix a power steering defect. Those two plants are responsible for 2/3 of that company's global production, and many of those cars were destined for the United States, which is Subaru's biggest market.
Demand for mortgages cooled after 2 weeks of sizable gains. The Mortgage Bankers Association reports a 2.7% decline from the prior week as interest rates ticked higher. Refinances, which are highly sensitive to rate moves, pulled total volume lower. Mortgage rates closely follow the yield on the 10-year Treasury, which has been sensitive to concerns over global growth and to the developments on U.S.-China trade.
And while demand for traditional mortgages may be cooling, the Wall Street Journal reports that unconventional mortgages are making a comeback. Ben Eisen wrote the story for the Journal. He joins us tonight to talk more about this. Ben, thanks for joining us tonight.
Hi, good to be here.
Now, I know we're not talking about those liar loans that were popular, that got us into trouble 10 years ago, where there was virtually no documentation. How are they different this time around? What are we talking about?
Well, this is sort of an evolution of the liar loan. It's not exactly the same thing, but what you're seeing is, much like those loans before the crisis, these are people who can't provide traditional documentation of their income to get a loan. So instead what you're seeing is untraditional ways of providing that documentation, whether that's bank statements or assets or anything else. That's sort of the way that they're qualifying to get a loan. And while it doesn't look exactly as risky as a liar loan, it sort of shares some of those common characteristics.
How much growth have we seen in this particular niche market?
So it's important to note that this is a very small market. This is less than 3% of all originations over the first 3 quarters of last year. But notably, it's grown about 25%, and that's during a time when you've seen sort of conforming Fannie Mae, Freddie Mac mortgages start to decline. So it's really the only mortgage category that's been growing over the last little bit.
But you did cite a survey because as rates rise and homes are less affordable, it's a tough market out there right now. So companies are looking for ways to increase revenue. And you cited a survey that said mortgage originators, a lot of them, are looking at these unconventional loans and may get into that market, right?
Right. This is seen as something of a growth area because this is a market that's been has been underserved over the last post-crisis period. So you're seeing these lenders that have kind of stayed away from a lot of these borrowers that are considered a bit riskier, are now starting to turn to them and say, well, now we can give you, we might be able to give you a mortgage if you provide this many months of your bank statements and have a certain FICO score and put this % down. So they're starting to have a little bit more flexibility than they did.
Quickly, what do the regulators think of this? Have they weighed in yet?
The regulators have been looking at it, and what you've seen is you've seen the OCC actually mention one type of loan. This is called an asset depletion loan, where you basically use assets as a way of deriving a stand-in figure for income. And they've noted that there have been some things that they've found a little bit worrisome in underwriting standards. nothing particularly alarming, but it looks like they're watching it closely.
And we will too, and we're glad you are too. Ben Eisen with the Wall Street Journal. Thanks again for joining us tonight.
Thank you.
A real estate record was set today. A New York City penthouse on Central Park South has sold for roughly $238 million, making this the highest priced home sale in the U.S. According to the Wall Street Journal, the buyer is billionaire hedge fund manager Ken Griffin, who also recently purchased several floors of a Chicago condo, a penthouse in Miami Beach, and a home in London, which was one of the priciest deals ever done in that city.
And finally tonight, a peek into the future. Boeing this morning unveiled a prototype of an air taxi that it has been developing for Uber. It's a battery-powered aircraft that has a range of up to 50 miles, and it does not require a pilot. That's correct. It is autonomous. Right now, it's unclear when demand for this type of transportation will become widely available, but we should point out that Uber does hope to have a flying car network called Uber Air up and running by 2023. Can you say the Jetsons?
Exactly. All right, before we go, here's a look at the final numbers on Wall Street today. The Dow rose 171 points. The NASDAQ and the S&P 500 both added 5. You won't get me in one of those.
Yeah, you first. Go ahead.
That'll do it for us tonight. I'm Sue Herrera. Thanks so much for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.